Welcome, everyone. This is Brad Matheny again. I'm highlighting my 3MACD strategy running on this Heiken-Ashi chart that you can see right here. Below that, I have a regular candlestick SPY chart. You can see down here, these are some levels that I had drawn previously. I'll get rid of those. And you can see that I have a linear regression channel. Let me shrink this down. I have a dynamic linear regression channels here that helps define price trend. And then below that, I have this wave trend 3D, which I tend to like because it shows support levels building and wave formations as well as moderate trending. And you can see here how we've kind of moved back into early stage reflation. Then we moved into later stage bullish trending. And then lastly, I like this Donchian ribbon channel. I like Donchians overall, a measurement of highest high, lowest low. Now they tend to be a little slower, but they're really good for determining when the markets enter into trend changes and when we have some real strong trends. Now we've had some big rotation over the last couple of days. In fact, let me take this chart here and shrink it down. You can see that if I go back to auto, you see we've had a lot of gaps here. Gap, gap, high rotation, down, gap, rotation, big gap, rotation down. And this is today and yesterday and today. But these types of gaps are typically occurring as we move into an apexing type of formation. Now, the Heiken-Ashi chart, the reason why I'm suggesting we stick with a Heiken-Ashi chart, let me try to line these up again real quick, is because the Heiken-Ashi chart is more of a momentum trending chart, okay? So I need to shrink this up a little more. It's more of a momentum trending chart. All right, close enough. So a little bit more. And what happens in a momentum chart, you can see we get a down signal like we have right here. This is a sell signal. Then we come down, hit our first target. We hit our second target. We come back down here. We're seeing pivot rotations in this new custom script I'm building for MENT.com members. But you can see here we've gotten into this channel. Remember, this is the channel that I was suggesting was gonna. It was a breakaway, I believe, and we were going to be looking for a potential bottom in this area. Well, eventually down here, we ended up forming a double bottom and then rallying a bit higher. You can see we went with a long trigger here. It's an early long trigger right here. And we eventually hit target one, target two back over here near the end of the day. But you can see here, we rolled into bullish trending with the Donchian channel. We rolled into bullish trending with the wave analysis. We rolled into higher lows here on the actual price pattern. So eventually, then we got another gap. We went immediately short yesterday. We stayed in the trend. We were in a downward cycle channel, and you can see the linear regression channels, excessive downward trending, more moderate downward trending, sideways trending, and then moderate upward trending. We're kind of doing the same thing across here. Excessive downward trending, sideways trending, a deeper final rotation, and now upward trending here. So we've moved into an upward cycle trend. And let me try to spread these out a little bit more. 21st or so, and try to spread this one out to about the 21st or so. Right about there, should be pretty close to alignment. Yeah, fairly close. So we have a scenario here where we are getting into an upward trending cycle. We've gone into green here. We've gone into green back over here. Let me try to draw a vertical line. So we had green here. Trend line. We had green trending took place right around here. Let me get rid of that and try again. So green trending right around here. We had green trending right over here, upward trending. with the MACD system. And then we had green trending here with the green trending here. And we had green trending right here. So ideally, ladies and gentlemen, what you're doing with this setup is you are essentially using the triple MACD system as an early trend indicator. Now, at this point, obviously, if you're aggressive and you're kind of in an upward sloping trend channel here, you can start to accumulate some positions, some call options, hypothetically. The way I want to continue to build this out is that I want to build this out with a protective stop level. And so it actually has a protective stop level internally in the code yet. These boxes here, like for example, here and here, are the projected target levels. So you can see here we got into target 2 over here. And we had already gotten through target 1 on this chart because we had already gotten below it. So it took this target 2 back over here. The objective of target 1 and target 2 is to teach you how to you pull your trade profits off. So ideally, you use these boxes here, or you wait for the target 1, target 2 levels. The target 1 level would be this upper box. Target 2 level would be this lower box. Same thing here. Target 1 level would be here. Target 2 level would be here. We never saw target 2 level reach here. We got very close to target 1 down here off of this little sell signal. And that means that down in this area, you could have been looking to possibly pull out. Remember, you want to lock in gains. You don't want to let things waffle around and watch a $300 profit turn into a $40 loss. That's not how this is designed to work. So you can see here we're above the target levels here. We do not have the targets being hit yet internally, and that's something I'm working on. But ideally, I think I'm going to keep it the way it is right now and just add the stop level. But ideally, we're at this upper target level here. What you would want to do is you would want to see this move. If you did get in back over here, hypothetically at 399.34, and we're up at 430, 425 or 400.17, this is a pretty good area for you to start scaling off a little bit, waiting for a potential add. Now, we could have a bit of a short squeeze into the end of the day. We'll see how it plays out, particularly seeing as though everything has turned green now. We have a green trigger here. This is a bullish trigger. MACD LE stands for long entry. SE stands for short entry. We're in a bullish trend. Let me spread this a little bit further out, and this one a little bit further out. Try to make sure these line up properly. That's one of the things I am learning with the charts. When you have two charts like this, sometimes they do not line up very well, and you have to kind of play with them until they do. Okay, close enough. There we go, close enough. So at this point, we're in a bullish trend. You can see the bullish trigger here. We're kind of above our target 1 level. We're target 2 level is going to be in this 400.86 to roughly 401.85. And we could go well above that on a short squeeze to the upside. We're in this standard deviation channel or linear regression channel, which as long as this channel stays in place, we should continue upward trending. We had a bit of an upward trend cycle here. You can see how we went from red back to green. We went into an upward trend cycle, which is exactly what we want. We want to see this type of an upward trend taking place so that we know that we're in an upper cycle. And simple way to use this wave 3D trend is this major cycle line right here. So hypothetically, this is the lines that are being drawn, but the major cycle line is this heavier line right here, changes from green to red. And you can use these shorter, intermediate, and longer term cycle lines to try to identify when we're getting short term bounces, intermediate term bounces, and longer term bounces. But ideally, once this pretty much this green line, this heavy line goes green, then we're in an upward trend. It's even more ideal when we get into all the lines staying above the green line or the middle line here. That means that from a bias standpoint, we're in an uptrend. You can see we've rolled a little lower over here on the short-term level. We could be getting into some weakness over here, which is why you would want to, like I said, try to maximize your profits. We could stay within this channel. So understand that the way the linear regression works is that price will typically stay within this channel, moving upward. If it gets above this channel, it'll start to draw a new linear regression channel. If it gets below this channel and breaks down, we'll start to draw a new downward linear regression channel. So this is a way of trending, of showing you, like, for example, it moved out of this channel, ended it, set up this channel. Eventually, it started off probably to the upside, eventually resolved to the downside, showing us that we had more downward trending with regards to the SPY. In this case, we're in an uptrend. We're pulling back a little bit. We'll see how this plays out. But ideally, this is setting up, as an ongoing system for you to be able to trade efficiently. Now, the strategy back tester here. Load my strategy. Okay. This is the strategy backtester for the Heiken-Ashi chart. Now remember, the Heiken-Ashi chart is not real prices. That's what you need to remember with the Heiken-Ashi chart. Heiken-Ashi chart is not real prices. These are calculated prices that don't reflect proper open, high, low, close data, because the open of any Heiken-Ashi bar is the midpoint of the previous bar, which may not be accurate. But what I want to highlight here is that in theory, the trending scenario, the trend analysis is 70, almost 72% accurate. So from a standpoint of keeping you on the right side of trend, it is better than a 50-50 coin flip, much better actually than a 50-50 coin flip. And as far as being able to target exits, I think you're going to find this is very sufficient. So for example, here was a down trigger that occurred yesterday. Let's come back over here because this is that same time frame. So you can see we had our sell trigger right here, and that's pointing to this bar right here. And you can see that gave us an excellent sell trigger on a 5-minute basis to be able to move downward. We came down and hit our first target, or actually our target 2 level right here. Target 2 level was right down here. So that again was about a $4 move. We continued to stay in the trend all the way down until we reached this buy level right here. And if I bring ourselves over to where that buy level is, that's right here. And that's 399.49, where our original short entry was roughly the open of this bar, which is roughly 404, 403.95. So that's almost a 4.5 point downward trend. It was a big day, yes. And now, granted, these last couple of trades here, if you look at these, we have no targets. We hypothetically would have gotten in right here. Let's go the open of the next bar, which is right here, 399.40 roughly. We would have gotten out hypothetically on the reversal of this bar, open of the next bar, which have been 398.28. So you would have lost about 65, 75 cents. We rotated back long over here, which is the open of this bar right here, 399.28, about another 45, 50 cent loss there. And now we're in a rally phase trying to carry onward. We're getting another bar here, upward bar that looks solid. Let's go ahead and auto scale. That is auto scaled. This is auto scaled. So as you can see, when we start looking at where we're at, we're getting nice channeling. We're getting green direction. We're getting green here with the momentum trend is in a fairly strong momentum to the upside. We've got a good, solid little rally taking place here, and we're back above our target 1 zone. this should move into a target zone fairly quickly and start taking targets as we move upward. So as I continue to develop this, the purpose of this is to give you day traders a suitable mechanism. Now, you could, of course, move to, like, for example, a 10-minute, and you could move here to a 10-minute as well. You'll get the same types of triggers, ladies and gentlemen. You can see here we held all the way down, all the way down. We've just rolled into a bullish trigger right over here. You can see here we have just gone green right over here, and we have yet to go green on the Donchian channel. We've gotten into weakness here. That's what these top levels are showing us, but we have yet to go green. If I were to go down to, for example, a 3-minute and a 3-minute, which is ideally what I want you to be able to do, is to dance around some of these setups. You can see here that we have gone long back over here. Target 1, target 2 has already been hit. We're in this upward channel. You can see that we've got this upward sloping price channel here on the 3-minute. You can see we had gone back to bullish trending right here where this crossed over, a little bit of a deep pullback. And you can see the Donchian finally confirmed right over here as an upward trend. So we're looking good for an upward trend right now. We're looking pretty good. We want to see this new high. We want to see this rally up and take off this previous pivot high right up here. But long and short of it, we're looking good. And ideally, I want to continue to refine this to give you guys more functionality. Now, remember, it's not perfect. I'm doing it to try to help you in a way that'll give you a multi-stage mechanism. When this turns, this is the primary system. You can start targeting visual levels and or mechanical levels for exits. When this turns direction here, you can start looking for when this is an upward trend, even though we might not have anything here, you can start trading off your own decision making. When this is turning bullish, you can start making your own decisions. And when this turns bullish, like I said, the idea here is I want you to have a longer term mechanism. So that's what the Donchians are. In theory, price is our primary direction. Indicators react off of price. So that's what this is doing. It's a quantitative type of a system, not really learning, but it does quantify internal factoring and mathematics. And the idea here, ladies and gentlemen, is to give you something that you can use to trade efficiently. Remember, not every trade is going to be a winner, and not every trade is going to be accurate. But I want you to be able to see for yourself how to make good trading decisions and when to be cautious. All right, guys, that's it for now. I will probably release the new 3MACD strategy next week once I finish buttoning up some of the things internally I want to finish. Okay, guys, that's it for now. We're looking for a little bit of a follow through here. Been kind of quiet. Let's see if we can get back up to 402 or a little higher. Talk to you soon.